Hello, Uranium friends. We are back with episode 5 of Uranium Talk, talking all things uranium. I am Jungle Funk from the Chart Guys, joined here by Chris, Red Devil. Chris, how you doing?
Joe, how you doing, buddy?
I'm doing good, man. I am doing good. We had a good week of trading, lots of volatility all around the markets. And what more can you ask for as a trader?
Yeah, a little slow on the uranium sector, but range
Yeah,
bound, that's what happens.
Yeah, exactly. That's what happens when you are in tightening ranges. So we'll touch on all of that here. The schedule for the programming today, we're going to talk a little bit about some exciting fundamental stuff with UROY, and then Chris is going to go into a URNM position that he is managing, and then we'll wrap it up with a technical status check across the sector. So, Chris, what's up with UROY?
So UROY, which is Uranium Royalty Company, they are, by the way, the only royalty company in the space, but they announced this week that their share of the CCJ's, I think it's McArthur River mine, they're deciding to take it in actual physical pounds instead of getting paid cash from Cameco. So it struck me as something interesting because, it's a testament. It says that the management of Uranium Royalty is saying, we believe that the spot price is going to go higher, and that's why we want our pounds and we want them now. So I found that to be interesting.
Yeah, that is interesting. I mean, they're essentially further betting on themselves and almost in a way kind of leveraging up within the space, betting on the rise of the pounds.
Yeah, which is, it's we're all sitting here languishing right now in this sector and this choppiness that's going on. And it's a good little sign. It's a little, I guess, what we call hopium.
Yeah, a little bit of hopium. You could say just another domino falling, another puzzle piece getting into place there. So, and UROY, after holding that multi bottom down there in the 210s, has had a nice move off of it. And now, like everybody else, we're just kind of range bound at the highs here. And we'll be watching out on 307 resistance. And then, really, the big one is 332. That's our
So
monthly lower
you
high
have
up
my
there.
chart up, correct, at the moment?
Yep,
All
we're
right.
looking at you.
So I, I kind of called this out in the room over here when this was occurring, but we saw the volume and we saw the strength, and it was a little bit, it stood out a little bit because the rest of the sector wasn't doing it. So, I grabbed a little bit of a position at, I think I got it at 248 was my number. And I trimmed out half. I didn't make this top, but I cut a little bit right around like 296 or whatever. I cut half. And my plan was, again, to reload right around the 260 area. And I missed this dip. So I'm going to be looking to reload my half when I get back down into this test. I mean, there is a gap down here that we have to be aware of, but that news that they're looking to take the pounds is interesting. So we're still, just like the rest of the space and resources as a whole, we're still contending with the 200-day moving average. But that's my plan right now. I do plan on at least reloading half, and I'll probably hang on to it. And if I get a little bit of a gap fill area here, I'm probably going to double my size there. And then 210 is going to be my stop out area, somewhere right around there.
Righto, that sounds like a good plan. And as long as 254 is holding as support, then bulls will remain in control of this move on up. And if we lose that, then we'll be looking to see some deeper weekly consolidation there. But yeah, like you said, 210, the key line in the sand at this point after bulls have put a foot in the ground there. So that's your UROY game plan. What are you doing with URNM right now?
Okay, so uh, the Sprott Uranium Miners ETF, URNM, it's clear. And there's plenty of guys in the UTWIT space. We all see it, right? There's a heck of a range here. Now, we've been talking about this 61 level for a long time, and that is like the spot. So, but we're range bound. So all that I've been doing, even though the sector has been a mess lately, right? It's just very choppy. All I've been doing is that when I get these 61, 62 tests, I hit it, I add, and then when I start getting up into the 69 area or where this 200-day moving averages, I'm cutting half, right? So, for example, let's just say I bought 100 shares at 62, right? When I got up to around 69, 68, I sold 50. Then when I came back down around 62, 63 again, I added another 100 shares. And when I got back up to this 200-day moving average, I sold 50 again. So that's how I'm kind of building my position. My line in the sand here, of course, is 61. So if 61 breaks down convincingly, I'm going to be out of that position completely, because then we're going to be looking down here as the next support. And that's been my plan. It's going to continue to be my plan until something changes here. So we either break out of this range bull or we break out of this range bear. Don't know what's going to happen. I just know how I'm playing it.
That is the way to play balance areas. When you've got a sideways range, those extremities of that range remain until we get out of it. So you can't really anticipate a break too much. So with that, I like the game plan of just adding as we get down to the lows, cutting as we get back to the highs, and then eventually you churn that enough and you end up with a cost basis down in the high 50s or something like that. And even though you're positioned bullish, even if it does break bear, you end up making money. So when you can get yourself in a position where even if you're wrong, you're banking some cheddar, then that's one of the top goals as a active navigator of the markets. Get your
I
risk
mean,
out of the
literally,
equation and
since September, you could be playing this range. You could just be adding and trimming along the way and always
yeah,
maintaining a position. And now you're reducing your cost basis, which is giving you some profit cushion to give yourself a little bit of room for the undercut here. Right. So, I mean, that's what we're trying to achieve.
yeah, that is an excellent plan, and we've got no shortage of tightening ranges across the sector. Certainly, we've got CAP that is still tight. We've got CCJ is still tight. UEC still in monthly inside bars. So I guess while we're rattling it off here, we may as well go ahead and start looking at these. So I'm going to go ahead and take over the chart here. And we'll just start off with CCJ. So you can see here, well, we'll start zoomed out a little bit, get our context in place. So we've got this monthly uptrend, higher lows on the monthly, and we've got bulls trying to shape up another one here at 2102, but they're going to need to break the weekly range to the upside. So now we've got a nice monthly inside bar, meaning the low of this month is below the high of this month is below the high of the previous month. The low of this month is above the low of the previous month, and we've got two of them. Obviously, today's December 2nd, so it's not too wild to be in a monthly inside bar. But when we zoom into the weekly, we can see this range just continues to tighten up. So zooming in once more to the daily, we had what could be seen as a little bit of a fake out here. We've been watching this kind of daily or 2-day tightening range, and we went up, we broke the level, and it's looking after this reaction that now the time frame to be watching is indeed the weekly. And but there's something to how that break took place, and we'll go to the hourly to look at it. And Chris and I were talking in the chart guys about this break, and we were talking about it in one of the live streams as well. That if you're coming up to a key resistance and you're looking to get above it, you don't want to be in these overbought conditions. So we were torqued on the hourly. We ended up breaking it into hourly overbought conditions. And what that does is it just opens up the door for bears to jump on it and say,
I think you nailed that short too, didn't you?
I didn't end up taking it. I was just ribbing you about taking it.
Uh,
But yeah, no, I was trading some commodities futures at the time, so only have so much focus. But yeah, at this point, we're just continuing to tighten on up, and we'll have to see these weekly levels break. So when we go back to the weekly here, that makes the key resistance at this point 2514 with 2594 after that. So And key support down here is going to be 2257 with 2234 below that. And the tighter we get, the better it is for traders because your stops end up being closer. And the more we constrict, the more explosive the break will be when we do break out. So obviously, everybody's rooting for upside here, but we will have to see what we get.
It doesn't hurt that the precious metals are starting to make a move too. So maybe it's these commodities people are starting to file in a little bit.
Yeah, it's definitely good to see bullishness just around the market, but we have to keep in mind that in the precious metal space, we still are looking for monthly lower highs across the board. So, and same with ES and the broad market. So, as much as this bullish action, on the heels of Powell saying that they may be reducing the pace of hikes, um, we got to remember that monthly lower highs will or they do remain the most likely scenario. So when those come, what the uranium space, when the monthly lower high on ES comes, what the uranium space wants to see, let's go back to this URA SPY ratio chart that is going to continue to be one of my top guides for the sector in a bigger picture. We eventually want to see this ratio chart break bull because basically when this chart's moving up, it means that uranium has relative strength compared to the S&P 500. And as we continue to tighten here, uranium bulls want to see a fresh monthly higher low set here. So that could be the type of scenario where if we do see the broad market start to pull back and uranium shakes it off and does fine, that could be that monthly higher low shaping up here. So going to be keeping eyes on that. Let's see, what else do we have? UEC still pretty much just sideways. We did break the low of last month marginally, but without much follow through at this point. And, not a lot going on here. So you can be looking at it with what Chris was talking about with URNM. You can be approaching UEC the same way, but on a bit of a larger time frame with this monthly range. So if we do pull back into the 340s or something like that, bulls will be looking to buy playing off of 318. And ultimately, we're going to need to get up and over 465 if we want to see this monthly tightening range break to the upside and then be looking back at our 2022 highs. So that's that. NXE is actually in a bit of an interesting spot right now. So we know that I'll go to the daily to look at this. We had many, many bottoms down here in the low 340s. And one of the largest reasons, or one of the biggest reasons for a shift in correlation is after you see a key support hold or a key resistance rejection. And after being one of the weaker names in the sector, part of our monthly downtrend crew with lower lows and lower highs on the monthly, bulls stuck a foot in the ground, held that support, and then it's been a relative bull over the past couple months here. So that is a good look. And we've got our monthly lower high resistance up here at 485. But we got a bit of a red flag today showing that there's potential that this relative strength on NXE is going to fade. And when we go look at the NXE URA ratio chart, we can kind of see where that is coming from. And the same philosophy that we were talking about on the URA SPY ratio chart of having the monthly tightening range and being able to anticipate some relative strength as bulls look for that higher low. Now we've got this NXE URA ratio chart looking like it could be beginning to shape up a monthly lower high. And if that happens and we remain range bound here, then we would see NXE fade from the spotlight of being the relative bull. And when we look around at sector performance today, we can see that NXE was one of the weakest names. So the 2-day 12 EMA is a nice guide here for bull control on this ratio chart. And if we're to lose that, then that would kind of confirm that thesis that we are seeing some relative strength or relative weakness, come into NXE.
So Joe,
yes, sir.
Just real quick on NXE, if you could just give me the screen back.
Yeah, absolutely. Let me go back to that and get you set up here behind the scenes. Okay,
We
back to your
there?
screen. Yes, here you are. You got the
So
spotlight
again,
on.
like I talked about that range play with URNM, you can do the same thing here. And this thing's giving you some. If you want to play this tighter range, you can do it, but you could also play this bigger range. So you've got plenty of time. I'm on a daily here. You can look at weeklies or whatever, but it's the same deal, right? So
Yeah,
you buy these lows down here. You know your line in the sand, right? Or maybe you use this as your line in the sand. Either way, you can conceptually you can do the same exact thing with NXE that I'm doing with URNM.
yeah, absolutely. And honestly, many traders, like it's more fun when things are either going up a lot or going down a lot. But there really is something beautiful about range bound names because you can, when it seems lame, it seems like there's not a lot of price movement, but especially in the uranium space, I mean that's a volatile range, 340 up to 480.
Yeah.
There's a lot of percents in there to capture. And when you can churn it back and forth and back and forth, you can end up capturing what you would capture on a big moonshot to the upside, just playing back and forth sideways in a range. So there's definitely that's a skill set that I would encourage traders to look to add to their trading tool belt because so often we see tightening ranges. I mean, charting man Dan from the Chart Guys, one of his favorite trading patterns is the equilibrium, where you're just tightening on up sideways, and we see them everywhere across all assets, all time frames. And if you can really hone in your equilibrium trading skills, then you just open yourself up to not necessarily needing a raging bull market or a big old dump or something to be
And
capturing
and and
profits.
uranium is loaded with them right now, right? But it makes
Yeah.
sense. Sideways action. What else you got?
Let's see here. What else do I have? I'll take the charts back. I honestly, let's check in on U.UN here. We'll go back to the daily. So we were talking a couple episodes ago about how we are going to be looking for our monthly higher low on this pullback here. We got bulls trying to stick a foot in the ground um, right from where we were talking about it, but they're failing to get on offense at this point. So what do you know? Another tightening range. This one's obviously a good bit smaller, but we've got our low, high, higher low, lower high, and bulls tried to put a foot in the ground here today, but looks like some end of the day profit taking. We had a nice move up in the morning and then just drifted on down from
Yeah,
noon
so
onward. So
and just for clarity, I don't really trade this name. I only accumulate when it's weak. So I'm just constantly adding in weakness and NAV discounts and things of that nature. So could you use the trading plan with that? Yeah, it's harder with this name. So I would stick to the big board names on something like that. That's all.
yeah, any name that you have lower liquidity, it's going to be more difficult to get in and out of and trade actively. So yeah, good point on this being more of a weekly, monthly time frame type trader than
Yeah,
certainly than an intraday.
if you want to trade that name, if for example, play the weekly chart, you
Yeah,
know?
yeah. Yeah, so let's take a look at the weekly here, and we've got nice clarity. Just got a lower high every weekly candle pattern, and when that breaks, we'll know that we've got a weekly bounce underway, and there'll be a lot of room for a weekly lower high compared to this 1794 level, and we'll just have to watch the retracement size and see if bulls can string together a good bounce and create enough room to set up a weekly trend change. And that's ultimately what's going to be needed to set this monthly higher low. So, yeah, I think that's pretty much it. Cap continuing to remain range bound. So, same thing that we were talking about with URNM. You can be doing this on cap as well. And that's pretty much that. As far
Yeah,
as the
man,
broad
we
market,
are
what
sideways range bound work. That doesn't mean that you can't make money in a range. Um, you
yeah,
know,
it's
the
honestly
200-day moving
easier money.
average.
It's easier money, and you have clean stops. Your risk is limited, and when
Yeah.
you can get yourself in a position where your risk is defined and it's limited, it's not sexy. Tightening ranges are not sexy, but it makes for clean, controlled trading. So
So no moonshot right now.
Not yet. We'll need to see this URA SPY monthly chart break to the upside, in my opinion, if we're going to see the true bull bonanza in the space. And if this breaks to the downside, I mean, we're here for the bull thesis, but we're also traders. So if this breaks to the downside, there will be opportunity to the downside. So we won't talk about that yet. But there's
Let's not
volatility
kill our
galore in the
audience.
sector. Yeah. Bears, never heard of them.
So,
Real quick, 1 second. I'm gonna
go ahead.
touch on the S&P 500 as far as broad market health here, and we're just gonna be watching this daily uptrend. So this is what bulls wanted to see after seeing the big old strong day on Wednesday, follow through into Thursday. Daily consolidation, and then buying the dip right off the 12 EMA. So the show will go on in the broad market as long as this daily uptrend remains intact. So we'll be watching the low of today. You can just say 4,000 psychological on ES. If that is taken out, then we'd have to maybe batten up the hatches a little bit, being concerned about some weekly consolidation possibly shaping up. But as we see follow through on this monthly bounce here, a lower high compared to this 4327 is the most likely scenario. So as we get up into this higher end of the range, you got to just make sure to be tempering expectations. So we'll always be watching the broad market, even though uranium of all sectors has the ability to kind of shake off what the broad market's doing. So not overly worried about it, but always got to be keeping eyes on these correlations and seeing how things work there. So, yeah, that's all I've got this week. Chris, you got anything more?
I got nothing, bro. Good stuff.
All right. Hope everyone has a great week of trading, and we will check in with you next week and see what shook out. Over and out.